Hey, Dustin Tibbetts, financial advisor here with Jazz Wealth Managers. The markets are quite aggressive right now. They're falling. Everything is scary. And I'm making this today for two reasons. I want, number one, those of you that have been through this before, I'm asking you to just leave a comment below for those people that have never been through this before. Help them out. Let's all work together on this one to say, hey, I get it. It's scary. The markets are falling. They're wild. They're all over the place. But it does get better, right? Let's help them out on this one. And number two, the second reason I'm doing this is because I'm getting a ton of emails from people that are trying to make decisions about their 401ks, their investments, or whatever, and they're kind of making the wrong decisions, in my opinion. But I have to be careful about the advice that I give to those of you that are not customers. Now, if you happen to be one of our customers, then I'm not going to stop until we have you guys all comfortable. There's no vacations, nobody's going anywhere, we're not doing any secondary projects, because this is a really important time for you to understand the correct decision to make, whether it's your 401k at work or some investment you may have or something you're doing with us. It's important that you make the right decision now, and you will for sure cheer when things get better. If you make the wrong decision now, you will be stuck on the sidelines waiting and watching, hoping for the best. So I'm going to just kind of walk through this here with you guys. Bear with me. It's a little bit dark because I'm just trying to get this whole thing set up. I want to just kind of, I kind of wanted to just dive in. So just bear with me here. If you are currently invested aggressively, then you have a profile that is going to follow or beat the markets by just a little bit, right? If you're invested really aggressively, then you may notice moments in time where the stock market is actually performing not as bad as your portfolio, right? So let's just do it like this. Let's say you're investing aggressively, right? You are going to probably participate more on the downside, right, than the stock market goes. And that's okay because you want to be aggressive. When things start to turn back up, you will eventually outpace that, even if only by a little bit, and whatever, it depends on how you're invested, but you know that you're doing the right thing when the markets go up. See, it's easy to be aggressive when everything's going up. When things start falling and every sector takes a hit, then you really second guess yourself, right? You go, I don't know, maybe I should move to more conservative. And so I get this question, like for the last 4 days, all I've got is questions from people watching going, I'm aggressive, that was fun on the way up, but now I'm scared, what do I do? And that's the key word, is scared. If you email someone, tell somebody, or you have a financial advisor and you say, I'm scared, and they don't respond with data, history, confidence in a way that's educational, that helps you, then that's a character flaw right there, right? That person should help, because when you tell somebody you're scared, that's you opening up saying, I've got nothing. Help me. Tell me what to do. Now, when you don't get that help, here's what people do. They say, okay, I'm going to switch from being aggressive to conservative. Maybe that means I'm going to buy gold, or I'm going to do some sort of bond investment. I might go to utilities or something that's a little safer. People say that. Defensive stocks, if you do a little research, that's the worst thing you can do, because what's going to happen here, I got all these colors today. Look at the videos that we've done about the stock market. What happens after the stock market has a 10+% pullback in a quarter, right? We know that 79% of the time, the stock market actually has a positive next quarter. Now, it's not enough to erase the declines. I'll be honest there. The average gain's only 5%, right? But we know the stats say the market will bounce out of that. We know that the market will bounce over 11% on average in the next 2 quarters. Okay? So here's what happens. If you're aggressive and you watch CNBC or whatever it may be, and you say, Dustin, should I go more conservative? Should I take my 401k and be more conservative? Here's what happens. The markets recover, even if only a little bit. I'm not saying we're going to scream back to all-time highs here, but even if the markets recover a little bit, you end up now in a slower moving portfolio, right? And you end up with not enough gains. So you took the big hit here, right? You couldn't weather this downturn. And now that the market is recovering, you end up with a portfolio that, rightfully so, is moving slower relative to the market. We don't want that, right? Now, we certainly don't want you not being able to sleep. But if you adjust after being aggressive to conservative, You are volunteering to give up gains when the markets do bounce. Ask yourself this. If you're scared right now, if you just started investing in October, November, December, or you're thinking about investing but you see what's going on, ask yourself, is the world going to end? A lot of people think the world is going to end. Believe it or not, there's always people, the gold commercials, they think the world's going to end. Number one, I would say, how many times has the world ended before? Right? Number two, if the world does end, do you think anyone's going to care about the stock market? Like, we will have so many other things to worry about if the world ends. The world is not going to end, I promise you. Think back in history. Every time the markets fall, it seems like the worst possible time on the planet. 2008, now that was a bad time. I think you guys would agree. That was a tough time. But it seemed like that was the worst thing that had ever happened, right? And in our lifetimes, it seems like it kind of was financially. So think about that. Is the world going to end here? And if not, and you have 10, 20, 30 years left till retirement, right? Then you're good to go, right? I'll leave you with one last piece of statistics here. And then I won't ask you to subscribe. I won't ask you to check us out at Jazz Wealth. I am going to ask you to leave a comment if you think that your comments will help somebody get through being scared. Because I can tell you there are a lot of people watching that are scared. But I'm going to leave you with a stat. The average bear market is 362 days. Bear market, not decline. The average bear market in the S&P 500 is 362 days. Half of all bear markets, I tweeted this out earlier today, half of all bear markets last less than 1 year. Bull markets are 4 times longer than bear markets, 1,660 days for bull markets. What that tells you is, number one, okay, this is not going to last very long. We'll figure something out. The markets will recover. We know that, right? That's a given if you've been through it before. What it tells you is your window to buy a discount is 4 times smaller than your window to profit from said discount, right? So when you see the markets fall, I've got to get all the new investors, you young investors. I'm 36. I still think I'm young. But those of you in your early 20s, you have to know, right, that this is an opportunity. And you got to get in that mindset where you go, this drop is exciting. Go look up like the Twitter feed for the S&P 500 and you will see people posting in there, bring on the collapse, bring on the decline, bring on this madness, because they like the idea of buying. I hope that some of you will leave comments below that say, bring it on, I can handle the drop and all that. If you're invested correctly, then the drops are exciting. You will get excited. I lose sleep over these. Like, I'm excited. I was tweeting all night last night watching the Nikkei, watching Asian markets, for God's sakes. So take a look at how you're invested. If you're not sure, you're scared, of course you know where to find us, but let me just keep helping. That's all I'll say. Just let me keep helping. We'll get you through it. If you feel like you can help, leave a comment, because I can tell you from the emails, literally hundreds of emails, there are people out there watching that are scared. They probably should get some help, but as far as their investments, but they are scared. And when you're scared, you just need advice. You don't need opinions. You need stats and history, in my opinion. So that's funny I said it that way. All right, we will see you guys soon. Thank you so much for watching.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.